China is Russia's largest import partner. So given that existing relationship, China likely will benefit. Now, if you look at the goods that that Russia has sanctioned in the EU and the US, it's only about $2 billion worth of goods on the food side. So even if China absorbed all of that, it's not a massive amount that will impact China's exports in a big way.
But we know it's been a fantastic year for China, particularly this last trade surplus, almost triple on the year. Is this sustainable? Because we keep hearing about how the government's focusing on domestic demand. They're trying to move away from exports, aren't they?
A bit, yeah. And so what we're seeing this month was an anomaly. We're not seeing much of a trade surplus in China for the rest of the year. In the following months, we actually see trade starting to moderate a bit out of China. Exports will continue to rise, and the surplus is rare in China these days. It's not as it was, say, 5-6 years ago. What we've seen is growth in exports to the US in July. We saw that grow up pretty well. Exports to Russia were up about 10% in July. Okay, but to put that in perspective, exports to Vietnam were up about 30% in July. Right. So these some of their trading partners, like Russia, could be larger than they are. So we'll have to see where those sanctions go.
Right. But we know that there are now opportunities for China to forge these closer political ties with Russia. Do you think that's going to help them boost growth in some way?
It could. As Russia tries to move away from the US dollar, looking at the Chinese yuan as a trade finance currency could be a very interesting point in that relationship. So the Asian Development Bank just announced a facility to underwrite trade finance in CNY. They announced that last week, and it'll be out later this year. So that could be a pivotal part of Russia's move away from the US dollar in terms of trade finance and other transactional activity.